Hey, it's Dan. Welcome back. You're watching iAllegedly. And 2 weeks ago we had Jack, and we got Jack now. So, guys, without further ado, Jack Haney, the CEO of Patriot Gold, is with me again. And thank you for inviting me down to this park, because I've never been here before, but this place is amazing. And we're in Del Mar. It's a city, just what do you think, about 15 minutes south of San Diego, would you say?
I would say it's by Torrey Pines, La Jolla. It's down here in Orange County, which, and thank you for having me back on the program again. And I'm looking forward to speaking with all of you. What's noticeable about Orange County is the politics. So Republican-led, counties in the state of California, what you'll notice is there's no homelessness. You don't see the hypodermic needles. You don't see the vagrants. You don't have a lot of that.
Jack's getting into it right away.
Well, it's, compared to Los Angeles, Venice Beach, where you have encampments, you have homeless tents, you have vagrants, hypodermic needles.
Unsafe.
So I have a 16-year-old daughter, and at the Santa Monica Pier just a few weeks ago, a homeless man attacked two individuals with a sharpened stick and was stabbing them in the face and the neck. And it's lawlessness is what it is. It's lawlessness.
Yeah.
And that's why Patriot Gold Group, we're based out of Seal Beach. We're behind the orange curtain. What a lot of people don't know is Trump won more votes in the state of California than any other state. So when you're behind the orange curtain, this is, hardcore, diehard Republican. In fact,
Coast Guard.
Yeah, here's Coast Guard helicopter passing over us now.
That's cool.
But that's why you see pristine beaches, clean parks, children playing, law and order.
This is cool. I've never been here before, guys. This is a children's park. So games, the kiddie area, but, it's really cool. I mean, it's just a beautiful spot down here, and we, still have our overcast days, but this place is great down here. But there's so much to talk about right now with the economy. And, one thing that we talked about is financial planning for, I always say that people need to go have meet with their accountant and their tax preparer a couple times a year so that they're ready, and see if they're getting the right deductions, see if they're on track. And, this year's almost half over right now. People need to get themselves ready for that.
Well, it's the summer months, and a lot of your viewers are spending time with their kids and their families, but you need to look ahead to the fall. You need to prepare for the third quarter. You need to prepare for the fall. You need to be looking into physical gold and silver ahead of wedding season, Indian wedding season. So Indian wedding season is historically a period of time where gold prices, that the demand, the surge of demand for gold increases significantly.
That's amazing. The third quarter is a big month, big quarter for that, every year after year.
So Indian wedding season is November to February, and it's an auspicious time in Indian culture in which last year there was 3.2 million weddings between the months of just November and December.
Wow.
During Indian wedding season. And we find that the demand for physical gold and silver is at historic highs during that period, Indian wedding season.
Wow. Gold found a great story. It's funny. It was out of India also, where they were talking about how gold has gone up already this year over 8%, and silver's gone up 5%. And the speculation is crazy. As gold hover around $2,000 an ounce right now, we're seeing, JP Morgan, Bank of America, Wells Fargo, Morgan Stanley, all these people talk about how gold is about to spike, and that we could easily see $3,000 an ounce with gold.
Well, Bloomberg just reported last week that gold appears to be a caged bull waiting for the next catalyst. Now, we had the debt limit deadline last week, and of course, they raised the debt limit one more time. But when you have Bloomberg saying that gold looks like a caged bull waiting for the next catalyst, they said Palantir had bought $50 million worth of gold in case of a black swan event. And this was back in 2020. We had COVID, right? That was a black swan event. Then you had Russia invading Ukraine, another. Then you have persistent inflation. Then you have the Feds raising rates. Then you have the stock market crashing. So in preparation of the next catalyst, because look, I don't have a crystal ball, but I'm quite certain the next catalyst is right around the corner.
But you have to look at Elon Musk. Elon Musk right now is talking about how we cannot ignore commercial real estate. And to tell you a great story, when he moved into the Twitter offices, he called, his CFO and said, "Do not pay the rent here. We're not." The only way to negotiate the rent for the Twitter building was to not pay it, to bring them to the table, because they're like, "Wait, you're Elon Musk. You're going to pay your rent," and he didn't pay the rent. And with that, it finally got them to the table to negotiate the rent, and it saved him a bloody fortune doing that.
See?
So, but he's also said that the big canary in the coal mine is going to be commercial real estate is going to fall first.
That could be the next catalyst. As a matter of fact, a commercial building in San Francisco that was valued at $300 million back in 2020 just sold for $60 million because of the vacancies of these commercial buildings. With COVID and working from home, very few people have returned to the workplace. So this commercial real estate crisis, there's an old saying, if you owe the bank $1 million, you have a problem.
Yeah.
If you owe the bank $1 billion, the bank has a problem. And so these building owners are not getting paid the rent from the leaseholders, and they're not paying their mortgages that the banks hold. So yeah, the commercial real estate crisis, Morgan Stanley too said it's going to eclipse the 2008 subprime mortgage crisis that we saw with residential real estate.
Well, this is the thing that I find interesting. Elon Musk goes back and forth on being number one or number two with being the richest man in the world. But for him to be so focused right now on real estate is kind of interesting, because he's talking about how we're going to see problems with residential real estate. The unaffordability of real estate right now for the average person is crazy right now. People cannot afford, the average family, to go out and buy a house right now. It's horrible.
What's happened now with interest rates, when the Feds have now raised interest rates 10 consecutive times. 10 consecutive times. We've gone from a 0% interest rate to a 5.5%. So on a 30-year fixed, you're now going from a 2.75 to a 7%. I mean, more than double. So what's happened here is there were a lot of individuals that were waiting for home prices to dip after COVID. And because with COVID, home prices skyrocketed. Everybody realized the benefits of owning a home and having a backyard for your family and how much time you're spending at home. So home prices skyrocketed. So everyone was waiting for the dip. But what happened is when the real estate prices started dipping just, say, 10, 15%, the Fed stepped in and have now raised interest rates.
Yeah, so it's crazy.
So that, even if the home is dipped 10% in value, the cost of ownership of that home is nearly double.
I have real estate professionals that have been and people that have done it for 20 years or more. That's what I'm talking about. They've told me how this is the end of buying season right now, because right before summer, normally you have this window where people buy property, and this is not the year. This is not going to happen. You're going to have a lot of houses on the market right now, and it's going to be interesting to see what's going to happen. So,
well, families want to buy those homes before the school year, get their children enrolled in school. So unless you see homes going into escrow now,
right,
what's going to happen is we're going to go into the fall with these homes dropping in price, but still with these interest rates that are, historically high for the past, say, 2 decades. So the cost of home ownership, it's still out of reach for many. Not to mention when they're going to the grocery store and they're spending $9 on a dozen eggs.
It's crazy, because that's only getting worse right now. And that's not subsiding. That's not, going down. We've seen in the last couple of weeks, we've seen gas prices start to go up again. This is crazy. We're starting to see, Saudi Arabia did a number on us, and we should be drilling here. We should, getting our own oil. We could have a conversation about that some other time. But this is crazy because all these increase in prices are affecting everything all around.
Energy independence is key, absolutely key. And the fact that we're not drilling, and of course, Biden and this administration did release the strategic oil reserves. That was ahead of the midterm. So it was strategic in that they were trying to win over votes by lowering gas prices by releasing our strategic oil reserves. Keep in mind, those are strategic oil reserves. They're not meant to win midterms. But we're going to see, gas prices skyrocketing here in the summer months, along with the, produce, the cost of groceries.
One thing that's crazy also is you're seeing, airfare shoot up. You're seeing the cost of travel shoot up, and we talked about this, the cost of hotel rooms, and people want to go out. I've had a lot of people write me about pent-up demand for vacations, and I understand that, but the problem is you got to be able to afford where you're going. You got to be able to get there. You got to be able to make it, reasonable. I mean, the price of Disneyland's outrageous. The price of doing most, travel is out of, the means for the average person right now. So.
Well, it's unfortunate, and we find ourselves in a predicament where we're $31 plus trillion in debt. As we had discussed just a couple of weeks ago, the interest payment on the debt alone is nearing $1 trillion a year. Inflation is persistent. In fact, there was an economist who had said about a year ago that inflation is the new normal. That this persistent inflation, this is the new normal. This pricing.
I've sat down with my friends and a friend that's a nurse, and I was explaining to her how the money that she's earning, getting a 2% raise does nothing for you. You're losing buying power. You're losing money month after month because of how expensive everything is. And then you hear about, I don't know if you heard about this, but in the UK, they want to try universal basic income, and they want to give, started with the idea of 30 people, then 300, then 1,000 people, that they want to give them £1,300 a month. No questions asked. Here's free money for you to see how they would do and what they would do with it. Now, I don't know what you do with, basically that's about £1,500 our money, isn't that right? So I don't know what somebody does with £1,300 to make it so that they can sit back and do nothing. But
I know what they'll do with it. I mean, when it's given to them and they haven't worked for it, they'll just go down to the pub with that £1,300, and that's their pub money for the month. I mean, we've seen this.
With stimulus money, it's funny. We would have people. I'd be like, is anybody doing anything good with this money? Or are you guys just buying TVs with it and stuff? And I had a lot of people that wrote that they saved it. A lot of people bought things with it. People bought metals. People bought silver. But the majority of the people just walked through it. It was just, bonus money.
Well, it's funny that you brought up Elon Musk. He was, either the first or second richest person in the world. Now, he goes back and forth, not with Bezos, but I believe his name is Bernard Arnault.
Yeah, who owns
the luxury
Hennessy
brand.
and all the luxury
LMVH,
yes.
Luxury Group. So he owns Dior, he owns Louis Vuitton. Now, what happened was during COVID, what happened with all that stimulus money, Louis Vuitton was sold out of their products. Hermes was sold out of their products. Dior was sold out of their products. All that money was getting spent on high-end luxury goods.
They would wait in line out in front of the store. They would have security guards. It'd be like going to a concert. They would wait in line, and these guys would sit there getting in line to go shop in the store because they would limit the number of people inside the store at one time.
And that's where the COVID stimulus money went. And what's happened, though, is with this imminent recession that they're forecasting, is his net worth has just come down to where Elon Musk has now taken the top spot as the wealthiest man in the world. And that just happened last week, as a matter of fact, or so.
You're seeing, one thing that's fascinating about that was you're seeing high net worth individuals that are cutting back on certain things. And that's the thing that I always tell people is you've got to look for the deals in life, save money, have cash on hand, get your bills paid off. Even if you're in debt, you need to have the emergency fund in one hand. I also think you need to have metals too. And I've talked about this, and silver, gold, have what you can have in the house, because when things go up, and as we've talked about this, you're always going to be able to use gold and get cash for gold.
Well, Swiss imports on watches just dropped last month to the lowest they've been in the previous 5 years.
Wow.
Just signs of the luxury good market slowing down, signs of an imminent recession. People are also strategically allocating their funds now into physical gold and silver, concerned about, the viability of banks with the regional banking crisis and really starting to question the FDIC because, with Silicon Valley Bank and then with Signature Bank and First Republic, there were deposits that far exceeded $250,000.
That got their money back.
So the feds just stepped in and raised the amount that was insured. But then again, those are for high net worth individuals.
Yeah, they took care of their friends. It's terrible.
Exactly.
And I always tell people, you need to have multiple banks. You need to protect yourself. Again, guys, look at Patriot Gold. Call them, for your retirement, your 401k, IRAs, even no fee for life 401k. 888-330-1431. Use the link below also. But they have a free investor guide too that you can get. And again, I'm not just a spokesman for the company, but having you on speed dial, Jack, I've said this before, it's amazing to be able to get your business acumen. And you and I aren't financial advisors, but we sit down and we watch the news and we're looking at everything that's going on around us. And when you see that central banks are buying more gold, billionaires are buying more gold, when you have places like JP Morgan that says it's time to get out of stocks and get yourself into cash and gold, you got to listen to stuff like that.
Well, just a few things that you'd mentioned there. Now, I'm not a certified financial investment advisor. I don't give investment advice. I've been on the front lines assisting retail investors with their physical gold and silver holdings now for 15 years, the CEO and co-founder of Patriot Gold Group. Not only do you endorse and sponsor Patriot Gold Group, but you're also a client.
Yeah,
you're a client of Patriot Gold Group. And when you see the regional banking crisis, when you see what's going on with central banks purchasing physical gold and silver, when you see concerns over interest rates, persistent inflation, the stock market, when you see forecasts for an imminent recession, what we're looking at here is we're at the tail end of 10 consecutive rate hikes by the feds. 10. So gold is nearing $2,000 an ounce with those headwinds. Mm-hmm. So when you have those types of headwinds and gold still nearing all-time highs, that when the Fed pause and when the Feds cut interest rates, which many are forecasting to be at the end of 2023, that's what many are forecasting, that they're already pricing it in the stock market, interest rate cuts at the end of 2023. Many are believing that's when gold, like Wells Fargo says, $3,000 an ounce. Bloomberg says $3,000 an ounce.
Bank of America now too.
Bank of America,
$3,000
an ounce.
They finally stepped forward and said that that you've got to look at that too. So it's look at physical metals, guys. You have to.
And Patriot Gold Group, just a few things to mention to your viewers. We're the only firm nationwide where you, the client, work directly with us, the owners. We're Consumer Affairs #1 rated for 7 years in a row. That's unprecedented. A+ rated on the Better Business Bureau. And just as I'm telling you this, the sun is coming out.
Oh, it's nice.
And it's absolutely beautiful here now. And again, those accreditations, the customer service, we haven't had a single complaint on the Better Business Bureau, not a single one. But
one thing that's great is the customer service, being able to call, being able to talk to people, answer questions. That's what everybody needs, is that you need more of that. Because I tell everybody to get advice. I tell everybody to talk to people, ask questions, and you need to have that. So it's important.
Yeah, you pick up the phone, you call, and immediately someone is available to you. The customer service, the owners working directly with the clients, available at any time. That's unheard of in this industry.
And with the economy, as we enter the second half of the year, guys, I just think that we are in for, we've been sold a bill of goods. They keep wanting to name the recession that we're already in right now, regardless before it gets worse, and it's going to get worse. The full employment recession is the latest one, a growth recession, progressive recession. I mean, all these stupid names are just a recession. This is just a recession that we're in. But signs don't point to it getting better right now. They point to things going downhill before they get better. All these massive layoffs, in the first half of the year, you've seen hundreds of thousands of people lose their corporate jobs right now. And that is horrific, guys. These are heads of households and wage earners, and they're going to have a very difficult time based on their age and based on what they're doing right now to get a new job. It's going to be difficult.
Well, insurance is best bought before you think you need it.
Yeah, exactly.
Now, let's ask ourselves objectively, we're going into an election year next year. What gets done in an election year? Nothing. Politicians are too busy campaigning for any real legislation to get passed. Now, I know many of us are hoping for a change in this administration. So one of two things will happen here. Either the economy will tank, right? And that would, help usher in a new administration, a new political party, some change in this country from what we've seen over the past 2.5, 3 years. Or the economy would somehow miraculously, wouldn't make any sense, would take off and do incredibly well, and we'd see another 4 years of this administration. I don't foresee that happening myself, given the amount of money that they're printing, a lot of the woke agenda, the $1.2 trillion infrastructure bill, along with all of the green energy initiatives that they're implementing. I mean, one thing, and the reason for the debt limit deadline was because they look at the tax receipts, right? How much tax they collected. And it was significantly lower than what they needed to cover our bills. So they had to raise the debt limit yet again. They keep raising our credit card limit and continue to spend. So
you brought up something in the last video that was amazing. And our total debt in 2011 was $15 trillion. And since that time, it's grown to almost $31.5 trillion in just that short period of time. Now we're seeing that the debt can go up $1 trillion every 6 months. That is incredible when you think about that. A family couldn't afford to raise their credit line over and over and over. A business, a country, nobody. And it's crazy right now.
Well, and Standard & Poor's, downgrading the U.S. credit rating back in 2011 when we were $15 trillion in debt. What happened was during this whole debt limit deal over the past couple of months, you had Moody's and Standard & Poor's evaluate our U.S. credit rating. And when they look and see that our debt has more than doubled since 2011, and they downgraded our U.S. credit rating back in 2011 because of the $15+ trillion in debt, what are they going to do when they take a look under the hood and they see we're, approaching $32 trillion in debt?
Yeah, it's getting ridiculous. And but guys, take the advice. Get some financial advice. Plan your retirement. Plan now. Talk to somebody who's been around the block, guys. I really mean that. These kids that are doing financial advice that have not seen an economic downturn, it's going to be a problem. And there's a lot of people right now that have their existing home loans and cannot sell their house, don't want to sell their house because they don't want to go from 2.5% interest rate to 7+%. And I've talked to realtors that keep telling me that they're getting loans that are over 8% right now because the people are self-employed. So there's a lot of problems coming for real estate, and people's payments from what they were quoted to when they go to close escrow up $1,400, $1,500, $1,600 more than they were quoted. Who can afford that?
Well, not only is inventory tightening because people don't want to sell their homes and give up their 30-year 2.75, but have you heard about the new mortgage, the 40-year?
Yeah.
The 40-year mortgage. So all they're trying to do is extend out that payment and make
look at the payment
40
difference.
years.
It's so awful. It's basically paying for the house over 2 times. It's just nuts.
Well, it'd be like a $800,000 house. Over the course of those 40 years, you really paid close to about $2.4 million for that home.
Crazy? 3 times.
40 years.
But the idea is not to owe anybody any money, guys. The idea is to have peace of mind. And you don't have to be, Elon, don't have to have all the money in the world, but you need to be able to put your head in the pillow and not have the wolves chasing you, to say the least. So,
well, let's also ask ourselves this. We had 12 years of ultra low interest rates, 0% interest rates, right? And excessive, ultra loose monetary policy by the Fed, right? So the stock market, these valuations are just still outrageous, right? But now they've raised rates at 10 consecutive Fed meetings, and they're tightening funds. So what you see is a shift from paper-denominated assets and stocks into physical gold and silver. So there's this rotation out of the, paper-denominated assets and the stock market and into physical gold and silver at a time when rates are going up, the market's pulling back, right?
Yes. Look at what professionals are doing. Look at what billionaires are doing. Municipalities, states are now recommending that gold become currency for their state. Mississippi was the last one that did that. Look at what countries are doing, and municipalities and central banks. They're buying physical gold right now.
Well, back in 2008, 2009 to 2011, gold had gone from $1,000 an ounce to $1,900 an ounce. Silver had gone from $17 an ounce to $50 an ounce. So does it look very similar to, say, 08 to 2010 right now? With back in 08 and 2010, you had the subprime mortgage crisis, right? Banks that were too big to fail. Now we're heading into what Morgan Stanley and Elon Musk warn is a commercial real estate crisis.
He says it's also
banks only getting bigger.
It's going to affect real estate because my two friends that are in foreclosures right now, they're every week they get busier and busier with the commercial real estate, but they've been warned, get ready, because they're finally going to start going after the residential mortgage and the people that are not paying their bills. There's a tremendous amount of people that have been able to not make their house payments during this time, and the bank will make a deal, and those days are done. They're going to stop doing that, and those houses are going to be, the loans are going to be called in, and those houses are going to become available unless those people can make those payments again.
Well, they used COVID as an excuse over the course of, say, two and a half years, and the banks finally have to call in that note.
Yes.
And there's a famous Mark Twain saying, history doesn't repeat itself, but it often rhymes.
Okay.
And that's what we're looking at here. And on Wall Street, they say, the most dangerous words on Wall Street are, this time it's different.
Yeah.
And this time it is different. It's worse.
Yeah, it is worse. And like the Wall Street Journal said last month, don't just sit there, do something. So do yourself a favor and call Patriot Gold at 888-330-1431. Get that free investor guide. Have them answer all your questions. And, I love that I get to be your spokesman. I love that. For those of you guys that don't know, it was one thing that I did was, I had my agent, and my agent's talking to Patriot Gold. And I had my suit on one day, and I'm like, you know what? Screw this. I'm sending Jack my picture. I'm your spokesman for Patriot Gold. And I sent that to you, and you were like, yes, you are. And then the rest is history. So I love that.
It's been great. And, I was explaining to Dan that just over the course of, say, the several months that we've been working together, what you've seen is this demand for gold absolutely skyrocket. So, this was something that you were suggesting to your viewers
take advantage
several
of it, guys,
months ago.
This is not even the peak, and it would be awful to miss this. So I'm ready. You guys should be ready, and call them today. Use the link below if you want. But Jack, always, it's great having you, man. And
Thank you.
Again, I mean it. I love that I can talk to you because I get your input on things, and but so many people are talking about physical metals, and people need to look at that right now.
Well, ask about our recession protection, no fee for life IRA on qualifying rollovers. $100,000 or more qualifies you for the no fee for life IRA. And again, we're Consumer Affairs #1 rated, A+ rated on the Better Business Bureau. You're not only a spokesperson, but you're a client.
I am. And I love the company, and thank you guys for being here. Don't forget to hit the like button. Don't forget to subscribe to the channel. And this is a beautiful park. I cannot wait to come back down here and film, guys, too. But thank you. Don't forget, if you need to reach out, hello@iAllegedly.com. If you have questions for Jack. Every time I have him on, people always write and ask questions, and that's what we do these videos on. But thank you for taking time out of your day.
Well,
I really appreciate this.
Notice we're wrapping just as the sun is coming out, because I think you and I might be heading down.
Yeah, exactly. But onward and upward, guys. I will see you guys very soon.
Thank you.